Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With me, economist John Williams. He is the founder, creator, and the driving force behind ShadowStats.com. John Williams, thank you for joining us today on USAWatchdog.com.
Thank you for having me, Greg.
Well, let's just get right into the politics, because I know your numbers really aren't politically driven. They're just the numbers. But you know what politics do to numbers, they distort them. And first of all, the debates with Obama and Romney, and I don't know who's going to win. They call it a tight race. You're calling for some pretty dire stuff to continue in the economy. Does it make a difference whether a Republican or a Democrat is in the White House?
Not particularly. There's very little that's being done to address the economy. There's not too much that can be done. The economy, best if left alone, would tend to be self-righting, but the government intervenes, and that throws all sorts of monkey wrenches into what's happening. People, as the politicians play to try and get votes, they rarely do anything that helps to improve the economy. There's nothing that's been done here that's going to be noticeable in the near term. Very simply because the average guy is having trouble making ends meet. He or she cannot stay ahead of inflation. And if income's not growing as fast as inflation, there's no way that consumption is going to grow as fast as inflation. That's the way they measure it in the GDP. And with that, if you don't have growth in inflation, growth in income, you can't support the consumption. You can buy a little time by taking on new debt, but unlike the period that we had in the last decade or so where the consumer could make up the shortfalls in his standard of living by just expanding debt, the average consumer doesn't have that available to him anymore. So there's no way the consumer can fuel the economic recovery. There's no way we've had a recovery, and there's no way we're going to see one in the near future. And despite all the numbers that the government comes out with, one thing I have found is that the average guy has a pretty good sense of what's going on. I'll look at Main Street USA over the government's numbers any day. And the people don't, even if the numbers were manipulated, and that has happened at times in the past, people look at the president as being out of touch with reality if they're not reflecting what's going on.
Well, you came out in some of your reports saying that, the process was opaque, that it looks like, this could be, the big drop in unemployment from 8.1, I think, to 7.8% was not really, doesn't appear to be real. It looks like it's manipulated. Even the USA Today, I brought this up in my own piece, their opinion section, talking about the economy, and this is their view, and they say in this opinion piece, this op-ed piece, that they know the numbers are underrepresent employment, overrepresent employment, and underrepresent unemployment. And they even say in their own opinion piece, they say that the numbers are flawed, but the flaws are consistent. So the lies are flawed, but the lies, and nobody would ever lie to us even further in an election year. And that's just not reality, is it?
Not at all. The flaws are not consistent, and it has happened in election years before. Real quickly, back in the first Bush administration, President Bush was running for re-election, running against Bill Clinton. There was a senior Commerce Department official who went out and talked with someone in the computer industry, trying to get computer sales boosted in terms of what was being reported to the Bureau of Economic Analysis, which reports the GDP. That happened. The GDP improved. The president talked about the recovering economy, but people thought it was out of touch with reality. Again, that's where Main Street's sense of what's going on is a lot better.
Same thing going on today. Democrats, Republicans, no difference.
During the Clinton administration. Now, this is with the cooperation of Congress in terms of changing the surveying techniques, but before President Clinton's re-election bid, they lowered the number of households that were being surveyed for the unemployment rate. And at the time this was done, it was also the one where they piggybacked the poverty report survey on. What they did was they knocked out 10,000 households of 60,000, mostly inner city. And I talked to them about it, and they said, "Oh, we don't have to worry about distortions in the number. We're going to model it." Well, of course, the inner city unemployment rate dropped, and amazingly, poverty went down for the first time in a long time. And then before the Clinton administration closed, again with action through Congress, they increased the survey base again, and George Bush got a rising unemployment rate with a recession that really dates back to the Clinton era.
Would you say the system is intentionally flawed to make things look better than reality?
It's intentionally flawed in terms of biases that are built into the system that give you overstatement of economic growth and understatement of inflation. What happened with this last unemployment report is something that may have been relatively innocent, but the Bureau of Labor Statistics, the agency that reports this, knows very well that the number was not accurate. What they do is each month they recalculate not only the current unemployment rate, but they recalculate the unemployment rate for the month before. They do this every month because they change all the seasonal factors. The only problem is that the unemployment rate for August in this case, which was published in August, they leave that intact. They don't revise it so that it's consistent with September. So that the 0.3% decline that was reported for September, that could have been a 0.3% increase. You don't know. They know. They have the hard numbers, but they don't publish them.
So we can all agree that the numbers make things look better than reality. That's for sure. This is why people like you, perform a great service to people who invest big money. Nobody would invest big money and look at the government numbers. But I have to read this to you. This is something that you said in your that you're previewing your upcoming hyperinflationary update. This is really big. A continuing economic downturn is intensifying in fiscal and systemic solvency problems. Public awareness of this should grow rapidly in the months ahead. So it sounds to me the economy is, in your world, with your numbers circling the drain, and people are going to start really seeing this in space coming up. Explain.
Yes, well, the economy indeed appears to be slowing down again, turning down. I'll contend that after the economic collapse that followed the panic in 2008, that the economy just collapsed. It went downhill, but then it just bottom bounced. It didn't recover as the government indicated. And now as the bottom bouncing is continuing, we're beginning to turn down again. As that weakens, not only will people experience it and notice it themselves, but even the government's numbers will tend to turn down. And we will be post-election within a couple of weeks here.
Well, you say we're going to have hyperinflation on the outside 2014. I mean, what does that look like? What is that? I mean, you think this is not a maybe now. This is a dead lead pipe cinch lock. We're going to have hyperinflation. Is it because of the $40 billion a month they're doing to buy mortgages and the $45 billion for Operation Twitch, which is going to continue, something like $85 billion each and every month? We're going to start seeing some pretty big inflation.
Well, we're going to start seeing some pretty big inflation with as the dollar sells off. That's what I'm looking for as a proximal trigger. I can't tell you exactly when that's going to happen, but everything's in place for the major holders of the dollar and the dollar-denominated paper assets, such as treasuries, to move out of them. And as they do, you'll see an intensified sell-off in the dollar. You'll see, among other things, a spike in oil prices, spike in gasoline prices, directly related to that. And with that, you start to see the inflation picking up here. The Fed's actions with the open-ended quantitative easing now have put in place the mechanism whereby the Fed can just go in and buy treasuries anytime that it wants to. It always could have done that. It did it in QE2. And in QE2, what they did, where the buying was active, they bought more treasuries than the net issuance of the treasury. They effectively monetized the entire debt. You can't do that for long without a hyperinflation kicking in, and that's what we're facing here, because The Treasury's going to have funding problems. As the economy weakens, that means the deficit gets a lot worse. I don't care what they try to do in Washington, but the deficit's going to be worse than anticipated.
Less taxes, in other words.
I'm sorry?
Less taxes are coming in.
Yeah. Less taxes are coming in and more money's going out to prop up the economy. The Treasury fundings will be worse. The banks are going to be in worse trouble. The Fed's primary concern is to keep the banking system afloat. And it's not doing so well with that. All these factors you have a confluence here at the same time that the rest of the world looks at the United States and says, the United States is not going to put its fiscal house in order. Why do I want to hold the dollars here? That they're just going to be debasing the dollars on me. I'm going to be losing money. And that's what eventually will trigger the sell-off. And as the sell-off mounts, that will provide the early start of the hyperinflation.
And how many of these dollars are held, or dollar instruments, bonds, are held outside the country?
In excess of 10 trillion.
And so if everybody starts running for the exits, well, hell, only a couple of trillion could cause a big dollar rout, right?
Yeah. Oh, yeah. And we're looking at something like 14 trillion right now in M3, the broadest measure of the money supply, at least the way the Fed used to report it. So that's a very significant overhang of money that can come into the system.
Some people are saying they're not going to let that happen. They're going to go to war before they allow a dollar sell-off. Could that, in effect, turn the table over?
A war, I don't think would necessarily help here. What they're faced with, and we've already seen how they respond, is the risk of systemic collapse, a collapse of the banking system. You had that in 2008. They weren't kidding when they said that the system was on the brink of collapse. And they did everything they could. They created whatever money they had to. They spent. They guaranteed. They loaned whatever had to be loaned in order to keep the system afloat. They're not going to let the system fail. That's the Fed's primary function is to keep the banking system afloat.
Are we better off today than we were before?
Huh?
Are we better off today?
Not at all. If anything, things have gotten worse. They did stabilize things a little bit. They pushed the problem down the road, though. They've done nothing to fundamentally alter the circumstance or to make it better, and the economy is getting worse, and along with that, everything else is getting worse.
I would suspect that you would advise people to get out of the dollar and buy gold and silver. Am I wrong?
That's generally what I look at. It's a type of circumstance. You don't need to worry about day-to-day fluctuations in the stock market. If you want to gamble, it's like playing a casino, that's fine, but look at your core assets first. And you want to look to protect the purchasing power of your assets and wealth. In order to do that, to preserve the purchasing power, gold is a primary hedge, physical gold. Silver's good. And getting some dollars outside of the currency, with the Australian dollar, Canadian dollar, and the Swiss franc. I think we'll do pretty well in this circumstance.
For poor people, just buy food, put tires on your car, get your house in order. Is that right?
That makes good sense. Right now, you cannot make a safe return on your money. You have negative interest rates after inflation even is reported by the government. So why would you buy a treasury bill where you're going to be losing money against inflation? You do better to go out and buy the goods that are going up in price and store them. You'll make more money with that. At least you're staying even with inflation than counting on getting income out of the government.
John Williams, shadowstats.com. Thank you for joining us today on USAWatchdog.com.
Thank you so much for having me.